Hi, this is Michael O'Leary again from Buy the Book Taxes with this week's video blog regarding innocent spouse relief. Over the past 4 weeks, I've done several videos on innocent spouse relief. First, an overview of innocent spouse, IRS Code Section 6015, where there were 3 options: traditional innocent spouse, then separation of liability, and then what was called equitable relief. I decided to add on as a bonus a 4th weblog on innocent spouse relief, excuse me, which is one that's not as frequently seen, which is innocent spouse relief requested by someone who lives in one of the community property states. A little different. Okay, excuse me, a little congested today. So there are 9 community property states in the country. 2 of them are in the center of the country, Wisconsin and Louisiana. The rest of them are in the southwest and west: California, New Mexico, Arizona, Idaho, Nevada, and Texas. Typically, you're familiar with the term community property states as it relates to divorce and how assets are separated in a community property state. And everybody thinks of pretty much California and to a certain extent Nevada, but there's 9 of them. Okay, so here's what makes community property states a little different than the other ones. If you have a couple who are doing married filing separate returns, in other words, they're still legally married. They may be legally separated, but they're not divorced yet, and they file separate returns. For the other 41 states, a married filing separate return only includes the income for each spouse. In community property states, a married filing separate return has the income for the one spouse and half the income of the other spouse. So that's a big difference. So if you are a requesting spouse looking for innocent spouse relief in a community property state, you are requesting to get relief from the tax associated with half of the income that the other spouse or the ex-spouse, now ex-spouse, may be including on your married filing separate return. A little tricky, but that is the important concept. Okay, here are the requirements for a successful innocent spouse filing in a community property state. There is a tax liability resulting from either underwithholding associated with the income of the other spouse or the underpayment of tax on the liability of the tax relative to the income of the other spouse. The second one is a little tricky, and it takes a little explanation. The IRS has 3 years from the date a return is filed to assess the tax. So the innocent spouse filing in a community property state must occur no later than 6 months prior to the expiration of the tax assessment date. Generally speaking, 2.5 years after the original return was filed. So make sure that innocent spouse in a community property state filing is done within 2.5 years of the original tax filing. Once again, you cannot have any fraudulent asset transfers or fraudulent filings. The term you always hear in this is fraud is forever. No statute of limitations on fraud, and you can never get relief if there's any sense of fraud, either in asset transfers or tax return filings. So here's what a successful filing looks like. The requesting spouse will only be responsible for the tax on their income on the married filing separate return, and not the tax on half the income of the ex-spouse or other spouse. So very similar to what a married filing separate return and tax liability would look like for somebody in the other 41 states. Refunds are available to the requester if the tax payments generating the refund were made by the requesting spouse. This is a bit of a tricky one. You don't see it every day. And for practitioners, in the other 41 states who don't deal with this, they may be unfamiliar with it. So if you owe the IRS money, have years of unfiled tax returns, or are getting threatening letters from the IRS, please call me. I can help.